taking out the time to witness this conversation around new form factors in credit. And I have a very esteemed panel with me. I'm very thankful for their time and I feel privileged to do this panel discussion. We are at Protean, we build digital public infrastructure, so we support credit through all our partners and ecosystem like this. Let's begin the panel. So I'm a big movie buff, and therefore I will use a movie reference just to kickstart this entire conversation. In Interstellar, right? There's a movie, Christopher Nolan. Matthew McConaughey travels through the past, the present, and the future towards the end of the film. And that's when he discovers the meaning of life. And I use this reference looking at credit in India, that we need to look at the past, the present, and then dive into the future in this discussion so that we can understand the entire credit ecosystem and understand what new form factors can really do for us. So without further ado, let me just open the panel up. I think I'm going to first start with, please help me understand, demystify the words and demystify the title when it says new form factors of credit and the changing requirements of ecosystem in TSP. I think it's quite a mouthful. I want to hear from all four of you. Perhaps Prashant, you want to start on this discussion and we'll catch on with the rest.
Thank you, Gaurav, and thank you everyone for joining us for the session. I think I'll just open the session with leaving it at a definition level. And when we speak about form factors, it can be seen into multiple dimensions. And let's at least talk about 3 dimensions, and then I will let my other panelists detail this out or show their views. But take up like a very basic credit, and like we were discussing just before the session, one particular dimension of form factors is the method of lending the way we have known.
It's a Gen Z or a millennials. Millennials, typically 30% they use the credit in the form of credit cards. That's right. What is that yes. Roughly around, they do that across. Whereas Gen Z, when we talk about 40%, they look at the digital channel, especially that mobile app as a factor. Right. That's why the form factors are increasing multiple opportunities. And the digital public infrastructure is giving a way for all these things. UPI is becoming a most critical channel for all these things. More than we say UPI as a payment interface. We see as we progress, we work with multiple service providers, Fintechs and other things as a Mindgate. We see this across will evolve as a much better channel for everything on this. The devices and form factors will keep evolving, which is just a matter of extending it across.
Absolutely.
So, hello everyone, this is Ajay here. At Card 91, we are the TSP. So, like this entire topic is somehow we involved very heavily, like how the delivery is taking place. So, in my opinion, there could be two points, and I want to keep it very simple. As a borrower, let's say if I want some kind of credit, what I want that it should be done in a seamless fashion and available whenever I need it. And second is the delivery, whenever I want to use it. So at point of consumption, point of sale, it should be done in a seamless fashion. And for whatever is the background, whether the lender has to do so much of data point processing at the back end or whatever, it should not bother me. So in that terms, I think the form factor is very important in terms of access to the credit. It should be easy enough, and then at the point of consumption, we should be able to deliver it in a seamless fashion. Probably UPI, in India at least UPI is the way, but I was discussing with my colleagues that yesterday I was talking to someone, and if you have traveled outside India, tap is the way to go. So ultimately UPI will also lead to that enablement where you can tap your UPI handle and make a payment. And that will be the pinnacle of form factors whenever it is there. Yeah. So I think that is we should aspire for.
Great. Thank you so much for sharing. I think what we heard, and I'll just quickly summarize. What we heard is, I think, different forms of lending credit, both short, both long. What we heard from Ajay was the quickness of delivery and access at the speed of thought. What we heard from Mr. Guhan was how it is dispensed. Digital is the way forward and thought process. Now, since there is so many diverse thought process coming around on new form factors on credit, I think I had read this somewhere and I recorded it so that I could use it for my panel. A healthy credit ecosystem can neither be established overnight nor with an individual effort. And it can never be considered a system established once and for all. It requires each role in the system to be forward-looking and be aware of what the big picture in the future looks like. Now, with this thought process, I would like to, again, start with Mr. Deepak, perhaps, on if you could help us look back a couple of years to look at how the changing ecosystem of credit looks like, right, in the last 1.5, 2 years. And what are some of the significant things that you have seen change that have created an impact either as a player in the industry or in the ecosystem where it has helped all of you as to move forward in the credit ecosystem?
No, I think it's great to see the whole ecosystem, the way it has changed. Credit used to be earlier NBFCs and banks, they thought they originate, they underwrite, so they have the power, right? But over a period of time, you realize that the marketplace or ecosystem has emerged in such a manner that unless you integrate and you participate across the ecosystem, be it for origination, because the point of consumption became the starting point for credit. Rate of interest became a commodity, so people were shopping for rates. Similarly, now if you look at the whole underwriting, because while lenders had the first party data or a bureau data, but then unless you go and make your business rule engines more attuned to getting the real-time data, understanding customer behavior which are beyond just the CIBIL score and your financial statement, you miss some of those opportunities. So I think the risk and underwriting itself became a big, I would say, holy grail, where those who could manage it better, I think they saw the growth, while BNPLs and low, ticket, high risk kind of categories, they had also their own mortality. And I think one of the big change, which has still not happened to that extent, like you pointed out, is on the whole collection ecosystem.
Right.
I think while we all see that there is an immense opportunity and we can solve a problem for origination and underwriting and thereby go for the new credit form factors and reduce the ticket size. But then again, I think unless you solve for the cost of collection, a lot of other efforts doesn't really add up. So I think we have started to make and see a significant change in that direction. But again, I would say we have just started.
Ajay, you want to take this, especially from a card lens and some of the form factors that you deal with, your organization deals with today?
Yeah, so I think, like as Deepak mentioned, that how easily it is accessible to a borrower, right? So whatever the background work has to be done by the lender. And I think like there's this wonderful thing, ULI, which recently got launched. So all these things will improve the speed of credit delivery and basically recovery also at certain point in time. And on the delivery side, I think the ease at which I'll be able to go to a, let's say, point of sale and consume that credit, that is going to make a huge difference. And things like credit line or UPI, let's say. So traditional POS is available at, let's say, 6 to 7 million at most at this stage, but UPI POS is 200 plus. So the acceptance is getting stronger, and like now everybody and anybody and everybody can go out and make a transaction. So all these things linked together can really make the difference in the entire ecosystem. And that's where I think NPCI and Government of India and everybody, like ecosystem players like us, are trying to enable that. So it will be accessing and delivery at a super speed. That's what I feel.
Right. Mr. Guhan, Prashant, you want to come in on the ecosystem on, so points around collection, points around dispensing. So we heard speed of, like the lightning speed and where it can be dispensed, some challenges around collection. How are you solving it as for your own businesses or from a technology standpoint?
I'll perhaps just add a subtext to what Deepak and Ajay were mentioning. And very beautifully, right, like what Deepak explained, that it's one part about thinking a lot about putting data sciences, putting underwriting constraints from all over the place, but its collection, right, becomes an equal and more important part for the entire ecosystem to move forward. And I'll just share some thoughts. In fact, a few years ago when I was heading the wholesale engineering for Flipkart.com, that's when these thoughts were building up, because over there that entire combination of credit and collections becomes a very prominent requirement. And some thoughts from those days which remain equally applicable today, that an NPCI, for example, right, is very well suited to create that ecosystem. And if there is anyone from NPCI, I would absolutely want them to listen to this, is the moment, you have been able to connect payment from the consumer, receiving at the merchant, and the underlying credit. If you have an ecosystem play between these three, a bank or a lender will be very, very convenient, find it very convenient to issue that particular loan and see that as the money is flowing into his account, instead of the one who has received the credit, him to send the money gets deducted from the forward collection account itself.
Right.
These 3 points you add it, knit it well, have the TSPs take over, bank is there, a fintech like me will be very, very happy to expand it. You have the group which will take it ahead. And like credit, we talk about a lot, obviously, in the end consumer sense, but the construct of credit is much more powerful and bigger when it comes to for the businesses. Just an idea that wanted to seed in context of what Deepak mentioned.
Thank you, Prashant. Going from a TSP lens.
Yeah, from the TSP lens, when you see these across, the credit always has been existed. But
Right.
whether how far it has reached to the people, that's a much more challenging thing that has been there. Okay.
Right.
As he rightly specified, the underwriting and other things, there are traditional systems are there. The things which used to take it across. Okay, BNPL gave a smallest way. How does the lending can be much more simpler and other things were there. But the thing is that as we progress, people always wants to be that the collection of the credit is always a biggest thing. Now the new way of collections are also coming across. With all the auto pays of the world that is getting enabled through the UPI and other things, we could able to see that across. In fact, one of the ways that we could able to see that across, one of the largest issuers of the credit card, we saw that the projections used to be that 5 lakh transactions a day or a month, that is becoming a throne of the numbers, 13 lakhs transactions per day sort of a thing. So it is growing rapidly. People are adapting much faster. As we progress, the underwriting systems of this ecosystem also will evolve in a much faster way to take a near real-time decisions. And those things, first to start with, we have got the channel and we have got the on hands, people's hand, the form factor. Right. It is that more of the ecosystem that has to work across the back of it to make it across. ULI and other things will, even ONDC is also putting across a lot of things. Right. So this will take it forward in a longer way.
Cool, thank you so much. I'll bring out a stat about India, and which is, I think a stat which we should know as facts, because when it comes to credit, credit is equal to growth. India is a country of MSMEs, SMEs, and the definition, the little definition of credit is that it gets me more business and therefore more growth. But India has a problem today. We are underpenetrated when it comes to our peers. When we look around the Chinas of the world and the Western hemisphere of the world, the developed economies speak about 170% penetration, 150% penetration, which means each citizen of that country perhaps has more than one loan, right, or more than one credit line at his disposal or at her disposal. Unfortunately, in India today we are at about 52-55%. Right now, I now move the conversation from a point of view of of the
banks, or let's say whoever the lender is. It's just very difficult to get a data on a borrower. So like new to credit, there's no credit score. So things like ULI or maybe some alternate data sources like UPI or maybe social score can improve that underwriting. So that is very, very core to the bank, and then they'll feel more comfortable on credit delivery. Like at least you have to know the person who that is and what is the usage the person is borrowing for.
So you're suggesting we move from financial scoring models
to
a more social scoring models?
It has to be. Right. We cannot only rely on the credit bureaus. It has to go beyond that.
Got it.
Now, once that is done, and I have been working with the banking industry for long, and there's one problem, very particular problem, is that delivery of a credit at a account level. So like if I'm obtaining a credit, if it is hitting my account, there's a challenge at the lender level. Like you have to verify the account, and you don't have any control on like where the money is getting spent.
Right.
And that is one very big problem. So that is getting solved by, let's say, tying it up with systems like Credit Line on UPI, because it's very specific. It will go to the UPI, and then you'll get the data where the money is getting spent.
Right.
And that will improve the access. And on the borrower side also, basically once they'll get the money, they'll be able to spend it across the number of UPI terminals. So like this entire ecosystem is getting built.
Right.
And probably 5 to 10 years down the line, we'll be able to see that penetration going higher with all these data sources. And so once you'll start spending, you'll start producing more data, which is getting consumed at the borrower level. And there could be new types of underwriting which will come into picture in next 3 to 5 years.
Keep on improving our scoring models.
Keep on improving.
Financial
and then
scoring is one, transaction scoring is another, and then social scoring might be the
inclusion will go higher. Yes, everybody will come into the formal credit system. Yeah. So that's how we should progress, I think.
Right. Guhan, Deepak, from a banker point of view.
I think the demand, like you rightly said, the demand of credit is huge, right? So I think be it on the business side or on the personal side, maybe be a bit wary of to what extent should it grow and how fast should it grow.
Right.
So probably I think we don't want consumers to be over leveraged. So while I think everybody would love to build at scale credit solution, but I think what we are going to see fundamentally different in India now, and I'm very, very confident because I'm working on that idea in particular with NPCI and folks, is that India will see a UPI-like moment in credit. The whole fast money business, right? So earlier, right now, the credits are long-term businesses. Right. You are underwriting a loan or a credit instrument for a much longer period, and thereby your due diligence, your underwriting process, everything was thought, I would say, for a previous decade. I think going forward, we are just going to see a model where if you are not going to do a million transactions a day on credit as an app or a platform, believe me, you will lose the moment just like a lot of them lost the UPI moment. And I think that is a big fundamental shift. Maybe I am taking liberty of professing it, but I'm seeing that happen very soon. And that means you need a very different kind of even a tech stack.
Right.
Earlier, people built a separate system for a credit card and a personal loan and an OD. But let me tell you, it's only one customer.
Right.
You underscore a transaction risk and you underscore a customer risk.
Right.
You don't need 20 different systems the way these were designed and built. So if someone has to go back and say, how will consumers avail? Yes, the point of consumptions, the railroads, single ledger, finding an integrated BRE and a collection system, and building to plug in across ecosystem. I think once, if you factor these 5 or 6 things, and I know of folks who are already building that kind of population-grade credit stack. There aren't too many, but I think those who are able to build and bring that around, you will start seeing 1 billion transactions across ecosystem happening on credit. Because I think demand was always there. It's now a question of you are putting credit on the same railroad on which you had your debit transactions riding for last 5-7 years. Right. So I think that's a phenomenal opportunity. And same on the business side, because the whole cash flow based lending with what ONDCs of the world are putting together and a lot of e-com merchants, they need just-in-time capital. I think it's just about thinking beyond obvious. And I keep saying this to a lot of even founders that if you are only solving problem for today and thinking about tomorrow, you're not creating the market for future. And I think that's what needs to, somebody has to start thinking and building towards it.
Yeah, when I see these across today at Mindgate, when we work with the UPI, we process close to 7 billion transactions a month out of the 14 billion transactions. So initially, predominant of these transactions used to be 3-4 years back, P2B.
Right.
And then P2M came. Today, P2M is dominating. Slowly, the shift has happened across. Like this, that credit on UPI and credit card on UPI started in a small way. Okay, in a small way last year sort of a thing. But now the rate at which it is picking up will always make the people to think about the tech stack and other things perspective.
Right.
Because the billions are not usually talked about in the financial transactions before, number of transactions.
Yeah.
But UPI created the opportunity for it basically. What we see this across is as we progress, this tech stacks underlying things will also change. Today the banks are also always see as a structured and, when you got the lending, the model, whether I can have that secured lending or unsecured lending sort of a thing. Secured, everybody is comfortable.
Right.
Unsecured require a lot of decisioning. Right. So with all the transaction data, so much data flowing in, the people will get much more visibility of analysis.
And access.
How much the creditworthiness of a person. Because traditionally, if you see these across, even in the villages and other things, people used to get lending at a very high rate of interest. Because there is no data available. There is no mechanism to understand whether the person is creditworthy. Only the person who knows, they give it across, but they give it at a higher interest rate. Now with so much data around, because everybody is using in some form or other, okay, with all the DBTs coming to the people's account, Jandan there, Aadhaar there, and then the mobile there, everything is making them with UPI to do that across sort of a thing. So the data of even a rural people is also available now. So the decision making of what you call the lending becomes much more, unsecured lending also much more easier in terms of that availability of the data perspective. So the tech stacks are also completely geared up. Since we have already seen the UPI tech stack gearing up, we see that lending tech stacks also will gear up to meet the expectations.
Super. Prashant, do you want to add?
Yeah, we'll just add something quickly to it, and I'll distill this problem of, let's say, democratization and growth of the credit ecosystem by just picking up the parts independently. Think about, again, from an ecosystem perspective, any lending done for someone who does not hold a history, there will be a fair bit of risk from a bank or the NBFC's perspective. So the first thing that comes is for us to enable them into the credit fold, the risk of the bank needs to be minimized. Technology absolutely will come to enable it, but supporting, like what again Deepak mentioned, a small amounts of credit. A lot of transactional credits becomes first and the foremost requirement so that a lender can feel confident within a few months of time or years of time, depending upon their business rules, that instead of creating a deeper depth of the credit amount which is lended, the width is created in terms of how many people are coming under the fold. Take up the second bit is, again, credit and consumerism are tied at the hip. Consumerism, in fact, also becomes one of the ways in which our country is shaped towards, with the population and the opacity that's increasing. That means enabling the deeper pockets at the merchant ecosystems becomes the critical part. Thankfully, UPI again has, for all practical purposes, solved it. I love to call it, irrespective of it's a UPR code or a tap and pay. You have an instrument which does not cost more than 100 rupees and does not require any rental at the merchant end. You solve it, he will adopt. Even the smallest merchants in the country are familiar and aware with the fact that they can always let go of a bit of a margin if their goods sold is 2x to 3x. And they understand it. You talk to small shops also know this fact. So UPI at the other end, a fragmentation, and not just like you issue a credit line, but every transaction that he's trying to do becomes a credit in itself that will allow at end of the day the lender to be confident and both the sides. And again, right, I talked about the consumerism system because on the other hand, if it's a personal credit, it comes at a rate of interest. It used to be very heavy back in the day. Now it's modest thanks to the banks and NBFCs and the regulatory bodies. But even then, it's something he has to pay for. The adoption is slower, as compared to when the adoption becomes in the form of a consumer play.
Right. So thank you. I think what an amazing panel, what an amazing round of discussion that we just had. We spoke about focus, changing focus on the large to small, focus on dispensing, better decisioning, and lowering the risks, and getting more width in the credit ecosystem than depth. Super. So that brings me to towards the end of the panel discussion. I would want to open it up again one last time. What are some of the things that you find exciting, right, in your areas of work? What are you looking forward to? And if I may call it Credit 3.0 going forward, what is one or two things that are keeping you excited, that you're building right now as an organization, or you're focusing as an organization, which can perhaps move the credit ecosystem and bring more people into the fold, or better dispensing, or better borrowing, or build better borrowing models so that we could dispense out more? Over to you. Mr. Guhan, if you can start. Yes.
Yeah. Actually, it's very exciting. We are in the transformation years of the country as a thing, because we have seen generations, how it has been sort of a thing. Especially the last 1 decade, it has been a very transformative. The way we transact things, that became a super exciting. You transform the country the way it is there. First, you have transforming in the way of transactions first. Now it is going to be in the form of credit first. Right. It is for the people who are creditworthy, who are in need of it. That is what is most exciting. Technology as a thing has to make it high resilient, available, scalable. All those things are most important. There are multiple tech stacks. We use it across, along with the NPCI and these things, along with the banks, partner banks, we do that across. But the most satisfying or fulfilling thing is that you are in the transformation in getting the people in need. Right. That's what is the biggest thing, takeaway for me.
Yeah, so I think at Card 91 what we're trying to do is we are leaving the decisioning aside, because that is under the borrower's fold, how they want to disburse. But after that, we want to take that over and simplify it through the technology, like the entire credit management, how the borrower are transacting and where they are transacting, what kind of data we can start supplying to the borrower. And I think the most exciting thing for me personally is that with more and more digital transaction, more and more data is getting generated, which will eventually lead to a better decisioning. So it's just like a circle. Right. It's like a life cycle where you have more data, you will be able to.
Yeah, it's like a virtuous cycle that feeds on itself.
And then you get more data, you will be able to do a credit decisioning very, very fast, very, very cheap, because that's also a problem. Like acquiring a new customer was a challenging task 5 years back, but it's getting easier, and probably 5 years down the line, it will be really solved for the lender also. Right. So these things are exciting, and I hope that in future we'll see the theory is that there has to be a pocket size.
Pocket size is what I think.
Pocket size lending.
Deepak sir gave us the statement of this panel.
At the point of consumption,
focus needs to be changed to bite-sized rather than long-term. Focus on loans and lending. Yes.
Right. Yeah.
Prashant, Deepak, I will close with Deepak. Perhaps.
Yeah. So perhaps, right, I'll just end where I started and just touch based on one of my favorite topics, and just to detail that out. And perhaps I'll again go to past, present, and the future, and look at UPI as an ecosystem. What we had seen in the past, essentially, as a player, it was between two parties, as long as it was involving a bank account, like your favorite P2Ps. The moment we come up with the credit on UPI, we made the third party extremely interested in this operation, which is a lender, which is a bank. They become a first-class party to this transaction. The future. Now think about it, these three players, the one who is taking the loan, the one who is selling the product, and the one who is truly doing the lending, are equally invested in. They are increasing the breadth of credit, they are increasing the consumerism. But one of the favorite parties which gets the most benefit out of this remains excluded from the ecosystem, which is the brands. It's the brands which make the biggest mullah out of the entire consumerism. It's the brands which hold the largest amount of profits, and it's the brands which have the largest leverage to invest back into the ecosystem, and they will be willing to. One of my favorite trips to stores like Chroma, etc., especially on the festive time, is when they say, if you were to take this particular credit, I will give you extra discount. Right. I will not give it to you if you pay me upfront. It sounds very, very contrived and ironical, but there's a very clear business model. Now think about this. If that QR code, and today what happens for a Samsung to enable this, it has to do so much conversations with the bank, with the TSP, and also the seller. But if, and Shravan, this is for you, if the QR code resolution had a leverage in which brand has registered its marketing promotions into the UPI rails, and the QR code resolution showed him, right, the consumer, the adoption of the credit ecosystem will have a fourth pillar. Right. And think about, when a vehicle runs on 4 wheels, right, the pace might as well be a lot more than what we are seeing today. I guess that's where I'll close my notes. Thank you, Gaurav.
Deepak. Sir. Close the session, please.
No, I think 2 amazing things are happening in front of us. UPI railroads are like the set of new expressways that are getting laid around. What you need is a different kind of technology to ride on these expressways. And that's what I'm working towards. So apart from being on board of Suryoday as an independent director, I do a bunch of other stuff as a tech entrepreneur. And one of those areas I'm very passionate about is solving population-grade problem for a country like us, because this is not just a model for India, but it's a model for a large developing and underdeveloped markets, where your data, and I keep saying that probably India is the only country in the world which became data rich before its people became financially rich. Right. Now the question is, can we leverage the power of data to unlock access to credit, working capital cycles for business, driving the consumption growth at the retail. And I think all this today, because we have now a railroad called UPI, I think working with lenders and the institution and ecosystem partner, I think what we are working toward is to see how do we drive in a right manner. I mean, ULI is again a great way in which things will get supported. Many other initiatives like these are all coming around. Now, what you need is someone to orchestrate through this to say, does this create an opportunity for a humongous growth and not just a 10, 20, 25% growth? Because at the end of it, everybody wants to grow, but at the same time, the bigger concern is what are the kind of risks that you are underwriting. So understanding all these aspects is largely where I'm focused on, and I'm sure in next few years, we will see few more winners coming out who have reimagined this whole credit story, just like Phone Pays and Google Pay or the world did the UPI story. I think we're just waiting for who are those who will raise and come and say, we are here to get into the future of credit.
Yeah, the last mile access perhaps. Yes.
Kredit.Pe sounds like a good name for that particular problem, like the way you mentioned.
I call it future of credit. In fact, there is an article I just published around GFF on that. So.
Great, thank you, gentlemen. It was a fabulous discussion, and I'd repeat, I feel very privileged to have this moderate with all of you. Thank you everyone for joining in. Thank you for your time, and I hope the discussion was fruitful and you gained a lot. Thanks everyone.